I would say that it is sort of an annual culling. They did a similar workforce reduction last year. I would also point to the fact that headcount across the big banks was pretty stable for banks like JPMorgan, Bank of America, Citi, whereas Morgan Stanley grew their headcount 3% last year. So now they're sort of back in the pack with this workforce reduction.
So we noticed that the cuts hit investment banking, trading, and wealth management. You mentioned that it's annual culling, but should we read into whether this signals a broader shift for the bank?
Yeah, it's interesting because last year when they did a 2% reduction, they didn't really touch their financial advisor force, whereas this year it seems like it's more broad in scope. So I think there's just maybe some changes in where they think that their advisors are, and maybe just shifting geographically as well.
You know, what are the investment banks saying about AI and as a way to make them more efficient, maybe with less headcount? Because I think about the first 3 years of my investment banking career, pretty much everything I did, running earnings models, LBO models, pitch books, pretty much all of my life could have been done by AI. I think I'm kind of pricing myself out of a job back then, but what are they saying these days?
Yeah, so AI is a big story. We just heard JPMorgan at the Investor Day talk about the benefits of AI in terms of personalization, pinpointing which customers would be open to different products and using AI to better use their marketing dollars for that. On the other hand, they've also talked about improving customer satisfaction with the call centers and the like, where there's less people in the call centers, which is expense saving for banks like JPMorgan and B of A, but they're also improving customer satisfaction. You can see that improving over time. So there's a double benefit on that front.
But is AI accelerating structural change when it comes to these banks? Because we've heard a lot of banks and fintech firms like Block actually citing AI as a reason why they're culling their workforce.
I wouldn't say we're going to see 40% job cuts from JPMorgan or B of A at this point. But I would say that AI is definitely reducing the need for headcount. And we've seen that given the fact that JPMorgan's headcount numbers are flat year over year. And really, they've been reducing their workforce within the consumer bank, which speaks to what I was just saying before with the call center.
Yeah.
You know, we were just talking earlier that 2026 could wind up being a monster year for IPOs. We're just talking about Anthropic, OpenAI, SpaceX. What are the banks saying about the prospects for IPOs in 2026?
Yeah, that is something that heading into the year, a lot of the investment banks were really enthusiastic about a pickup in capital markets issuance and activity, specifically with IPOs and equity capital markets, and also in M&A. You talked about some of the three headline IPOs that could potentially hit this year. That being said, there's been some volatility and turbulence in the markets today, so maybe that pushes things back a little bit. But overall, there is some general enthusiasm. And JPMorgan mentioned capital markets would be up about mid-teens for the first quarter. So there's hope that could continue going forward.
Do you think that these layoffs will affect Morgan Stanley in competing with top talent? Because to Paul's point, it's going to be such a busy year, or is this par for the core in most banks?
Yeah, I would say Morgan Stanley is one of the top investment banks, particularly in technology, TMT, and they're going to get their fair share of deals and win a lot of mandates. Just given the fact that they have really strong banking presence within that industry, we'd expect them to do really well in 2026.